Oh man, so Bitcoin takes a huge dump. What does this mean for the crypto market and altcoins? As you can see, a huge amount of liquidations occurred, with $350 million getting wrecked here as Bitcoin suddenly crashed from just hovering shy of $44,000 down to, look at this wick, guys. Look at this wick taking you as low as 40,800. Yes, a big wick here to the downside. Bitcoin still struggling here on the hourly chart, trying to hold support at 41.7, this horizontal support. What does this mean for the wider markets? We are heading into now one of the biggest weeks from a macro perspective we have seen in a very, very long time. In this video, I'm going to break down what it is we're expecting this week. It's a bumper week. Expect volatility. This is just going to be the start, and you need to make sure you're on the right side so you are not one of the 350 million, look at this guy, 350 million people, dollars worth, sorry, getting wrecked in that wick to the downside. Guys, if you appreciate this type of content, smash up the likes. Don't forget to subscribe. If you guys want to actively trade with us, I'm actively trading. I've taken a trade today. Then make sure you jump into our Telegram community, ijazcrypto.com/TG. I hope to see many of you in there, because one thing is for sure, when you get volatility like this, guess what it helps? It helps traders. And as a seasoned trader, when I see volatility like this, when I see a week like we've got this week, I lick my lips, rub my hands together, because we're going to get ready to take some big trades. Now, for your long-term portfolios, maybe you're feeling a little bit nervous. Maybe you're panicking. I see a lot of people messaging me over the last 12 hours or so panicking. Is there any reason to panic? I'm going to come on to why this market is feeling a little bit nervous. Now, first of all, let's jump on over to the traditional markets just to get a resemblance of what's going on. And you can see the market's a little bit muted here, right? Nasdaq slightly flat. You can see S&P a little bit up, not really, and same for the Dow. It's a flat market, a tentative market. And why is it that the market's a tentative? Well, we have a big macro week coming up this week, and it starts off on Tuesday with none other than the CPI reading. Yes, the final CPI reading before the FOMC press conference. But it's not just any FOMC press conference, no. Jerome Powell is not only going to decide whether to pause or not, but will he give us clues? And yes, there will be clues. I'll tell you that as a fact. What are those clues going to be for next year? And in terms of whether we're going to get our first rate cut. And this is not just about America, guys. No, this is not just about the US. Other central banks will be watching the FOMC meeting. They'll be looking at what comes out with it. Remember, we get a summary of economic projections as well, and they're going to use that to define their policy going into next year as well. So very important meeting on the 13th. So the FOMC meeting is on Tuesday and Wednesday. On Wednesday, right, we will get the press conference. Right after we get the PPI numbers later on in that day, we will get the FOMC Fed interest rate decision, followed by the question and answer, right, the Q&A that Jerome Powell has. But more importantly, we're going to dig into the PDF, the summary of economic projections, to see if Fed officials are planning a rate cut, and if so, when. Really important. I know it's boring. I know it's a little bit complicated, but this is why the market's moving right now. If you don't like it, you got to learn it, right? So the market as it stands currently is pricing in here that we are not going to get a rate cut, right? As in, they think we're going to get a pause right now, which is good, right? They're happy here, pricing in the fact 97% of the market are saying we're going to get a pause. Fine, right? That's pretty much deemed in control. If we don't get a pause, market's going to go crazy, right? But what's more important is what's being priced into the future. Are you tired of worrying about the security of your cryptocurrency transactions? In this crazy world that is crypto, protecting and preserving our digital assets is everything. And for that reason, I partner with NordVPN, the best VPN service for crypto traders. With NordVPN, you can be sure that your online transactions are completely secure and your identity is hidden from prying eyes. Their military-grade encryption technology makes sure that no one can access your data, even on public Wi-Fi networks, so you can trade with complete peace of mind anywhere, anytime. Guys, seriously, don't risk your hard-earned crypto and NFTs for the price of a coffee each month. They've also offered a free month and up to 60% off their plans. Oh, and they've got a 30-day money-back guarantee. Guys, seriously, it's a small price to play for a rapid, safe VPN. Definitely check it out. Link is in the description. Ijaz.uk
bitflex.com/NordVPN, and let's get back into this video.
Take a look at this. This is the March 2024 projections of where market participants think we're going to be. And 38% plus this 1.5% here, so call it 40%. 40% of the market think we're going to get at least our first rate cut by within Q1 of next year, by March. Right? Insane. And this is really, really positive considering we've just been through one of the tightest, steepest rate hikes we've seen in a very, very long time, to now be in that final innings where we can almost see the light at the end of the tunnel. We can see that we're about to get that rate cut. Monetary policy is going to come into our favor. They're going to start loosening again, which means money starts net flowing into the economy, not net coming out of the economy. Remember when I said, oh, look, Jerome Powell's our friend and now he's not our friend? Well, guess what? We're close to central bankers becoming our friends again, which is where they're stimulating economy. They're going easy on us. They're softening interest rates, and eventually at one point they'll start printing again. Yes, that's when the dollar index moves to the downside. That's when risk rotates on. And this is the main trend you need to understand if you're trying to invest in this market going into the next bull run. You don't need to understand anything else. So we take a look at the dollar index here, and one of the reasons Bitcoin's done really, really well is on the 2nd of October that week, we managed to send the dollar index back in its box, right? It was on an absolute crazy move here, and we sent it back in its box, but now it's trying to bounce, right? Look at this doji candle here. If you guys aren't familiar with this, you would have learned it in our TA course, ijazcrypto.com/TA. When you see a candle like this, a doji candle, it signals a reversal. And look at what we got. 2 weeks here of now the dollar index moving to the upside. But that doesn't necessarily have to be bad, because if I bring out the EMA ribbon, you can see that it's having to run into its EMA ribbon. So there's a very important battle going on here. The bulls want to do this, right? So risk can rotate on. But the bears will want this to happen. We'll want the dollar index to move to the upside and keep risk rotated off. Now, what would need to happen for risk to rotate off? Let's think about it. For risk to rotate off, inflation, the CPI reading, and therefore the PPI reading we get on Tuesday and Wednesday, would have to surprise to the upside. Right? Labor figures would have to surprise to the upside. We got our labor figures last week. They looked okay. Markets were pretty happy with those. Right? They weren't crazy. They were okay. Now, what about the CPI? If the CPI comes in and shocks markets and says, hang on, inflation is not coming down, then the market's going to have to price in that Jerome Powell isn't done. Forget the pause and when are we going to cut? Maybe he's going to do another rate hike. But at the moment, that's not where the market is. Markets think Jerome Powell is in control. Markets think inflation is coming to the downside. And that's what the data is suggesting at this point. And so with those variables the way they are, and with Jerome Powell set to pause again, this is further evidence that dollar index is more likely to move to the downside, excluding a really horrible CPI, which then moves us back to the upside. Okay, so if we can keep this dollar index on this weekly chart sent to the downside, keep this downtrend going. I want to zoom out again just to show you and give you perspective. These were bull markets in crypto, right? And traditional markets. So we need to see that happening. We need to see this dollar index really on this weekly chart get sent to the downside powerfully so we can ensue our next bull market and risk to rotate on. Okay, very, very important. Now, shorter time frame, look at what we're seeing, guys. Look at the daily time frame. Dollar index is moving into its daily EMA ribbon, which explains why crypto is moving to the downside. They're inversely correlated. But it doesn't matter. The dollar index needs to break resistance here. In order for crypto to go for a bigger pullback, which I'll show you what that means shortly, this would have to reclaim the EMA ribbon and go up here. At the moment, it's not done that yet. So there's a lot of pressure coming in from this EMA ribbon to keep this downward trend on the dollar index. Remember, a trend is normally like this, right? You're correct. And then you have another impulse move to the downside. Okay, so we need to watch out for that. Now, jumping onto Bitcoin, what does this mean? Should we be panicking? Should we be worried? Well, first and foremost, you should not be panicking by what we're seeing, right? If you take a look at what we're in, if you're following my tweets and my Telegram posts, you guys will know that I warned you guys as we were coming towards the apex of this triangle. I warned you about here. I said, guys, we're coming towards the apex of the triangle. Bitcoin's going to have to decide its direction, right? And if we see a dump to the downside, expect it to come down to support, which is around these levels at 41.6. And that's pretty much where we're at. Yes, you did have a really, really brief wick all the way to the downside, but this is just because of leverage in the system, right? There was so much leverage in the system, $350 million of leverage getting wrecked in 24 hours. In fact, it wasn't even in 24 hours. All of that leverage got wiped out in this one hourly candlestick, right? It was an hour. It was an hour of chaos, and it wrecked a whole bunch of people's leverage. A good reminder for you guys to stay away from leverage. One of the reasons we see crypto as being such a volatile asset class is because of the ease of access to leverage. This is one of the reasons we get crazy pumps to the upside. I agree with you. And everyone says, yeah, look, we get loads of upside as well. But no, guys, is there any point you having plus 100, minus 100? You just end up net growing at the rate you're going to grow at anyway. So having leverage in the system is not good. It makes it feel like it's good because you get crazy candlesticks on Bitcoin. But equally, you'll get crazy wicks and candlesticks to the downside as well. So longer term, leverage in the system is not good. That being said, it's important that we flush out this leverage in order to be ready for our next move to the upside. And typically, one of the situations you start to see when you see symmetrical triangles break to the downside is sometimes you see it break to the downside, liquidate everybody's long positions, and then it starts going up for a big move to the outside, right? So if we zoom out, it could be that not only are we going to have all this leverage liquidated here to the downside, it could just be a precursor where it's gone, hang on, I'll take all your stop losses out and then I'm going to start climbing up towards 45. Very, very common pattern I see here. When you see a symmetrical triangle, everybody goes, oh look, it's a symmetrical triangle. Even a newbie can spot a symmetrical triangle. And guess what they do? They go, okay, I'm going to put my stop loss here and I'm going to take the breakout and off I go. I'm going to trade this to the upside. Yeah, not so easy. We're going to liquidate you, forget all you guys, and we'll pick up here and off we go. Now we'll go to the price target. Okay, so you've got to be very, very experienced. Market makers certainly are experienced at doing this all day long. They can do this. And obviously me, having worked in traditional finance, I saw this happening to retail traders every single day. So clear support here at 41,000 here on the hourly chart. On the 4 hourly chart, you guys can see it still acts as good support. But let's be honest, where are the next levels of support? I mean, here on the 4 hourly chart, that big candlestick we saw a couple of candlesticks ago made us break support, right? We broke support of the EMA ribbon. We've broken the purple channel as well, which was our ascending broadening wedge. And now the question is, where do we head to next? Well, your next horizontal support, if we lose 41.7, is 40,000 flat. Very important psychological level. Now, is it a surprise if we come down and test those levels? No. Because we ran up so powerfully to the upside, it's perfectly normal for us to pull back and have retests. I want to show you this for perspective. This is the chaos we saw today, right? A big 4-5% candlestick. But does it really mean anything? I mean, look at just zoom out and look at that chart. We've just touched the top of the daily EMA ribbon. That's it. That's it. All that chaos, 350 million liquidated, and we've just touched the top of our EMA ribbon. It's not even a significant pullback. I'll tell you what would be a significant pullback, which I wouldn't mind. I wouldn't panic. If we see the price point fall all the way to here, 37,000, I'm good all the way up until that point. Right? No concerns whatsoever until we start losing our daily EMA ribbon. If I saw a candle close below 37, then I start to go, okay, we're losing trend here on the daily chart. But on this time frame, anything pulling back into those areas, anything pulling back into this region, right? 38.5, all of these levels here, I'm happy to DCA. I'll DCA the deeper we get into our EMA ribbon. Now, I will have a nibble here. These were nice nibbles if you managed to catch those wicks. I didn't manage to catch it. I wasn't on my PC. But I would, right? If I saw the price point again, touching close to 40,000, I'm nibbling. But when we lose 40, I'm going to buy in bigger chunks all the way down to 37. I'm happy. If we lose 37, then we need to reevaluate. Right? That's what I'm looking at here from a daily perspective. It's perfectly normal. I have no issues with that. Even better, if you zoom up to the weekly chart, this is what we just experienced. Again, it's a nothing burger, right? After 1, 2, 3, 4, 5, 6, 7, 8. Now, on the 9th week, we start off with a bit of a red candlestick. Right? It's not the end of the world. It's not crazy. And this week could easily end positive as well. Right? If the FOMC roars in our favor and we start seeing, oh, look, they're planning to cut interest rates. Don't be surprised to see this week end in the green as well. And again, I want to reiterate, this price action can move all the way down to here at the start of the EMA ribbon at 33.7. And I'm not bothered. It can even go deeper. It can go here. It can touch 32. Remember, these were the peaks at 32 where we got rejected. If it wants to come down to 32 even, I'm perfectly fine with it. Not ideal. I know it's not fun, but I'm perfectly fine with it. It will give me an opportunity to dollar cost average. It will allow me to add more, and it flushes out the overzealous longs. It flushes out all the tourists who are buying in at high price points. Because guess what? Who's panicking right now? Only people buying on the peak of that candlestick are panicking right now. Only people buying at 43, 44, 45 are panicking when it drops to 40. No one else is panicking. If you bought a 15, 20, 21, 22, 20, all the way up to 30, you're not bothered, are you? Even if you bought a 35, you're not bothered at this point. You've got plenty of room for comfort. It's only those people FOMOing in, chasing those green candles, who are feeling it right now. So guys, big volatile week this week. Hopefully that gave you a good understanding and landscape of where we're at with this crypto markets. Of course, all coins getting decimated as Bitcoin falls 4.6%. But really, should we really be worried? Hopefully this video gave you that message and a lot more. If you want more updates in between my videos, ijazcrypto.com/TG is our Telegram community. It's free. Jump in there, talk to like-minded individuals, share ideas, share trade patterns. I share mine as well, and we'll learn together through this bull market. Thanks for watching, guys, and I'll see you in the next one.